Top 3 stocks to buy that are under $25. That's what we're about to get into in this video here today, folks. I am going to tell you what 3 stocks these are, why I like these 3 stocks that are all under $25, and where do I think these stocks are going, what do I think are the buy targets for these particular stocks, and all that good stuff in this video. I think you're going to enjoy this one here today. All I need from you guys before we get into this, smash that like button and make sure you're subscribed here to the channel if you're not already subscribed, okay? Let's get into this, guys. Right off the bat, number 1 of these 3 stocks that are under $25 that are a buy is SoFi Technologies. SoFi Technologies is a $6.39 stock here today, and I do view this stock as a buy right now, okay? So when it comes to SoFi, you might have heard of it before. It's an online bank. It's really, kind of what you would think about when you would think about a new age financial institution. It's really phone-centric, right? It's mobile first, like the devices people are actually using nowadays, right? And you might have heard of it from sports because they integrate very well with sports. They have a massive stadium rights in terms of a massive contract with the big stadium that's in Los Angeles. You see they have partnerships with the NBA, the official bank of the NBA. So when it comes to SoFi, they really do a great job of branding when it comes to that. And then they're going to get you in the ecosystem somehow. So it could be through a personal loan, which basically what they'll do is many times they'll offer you a more competitive rate than whatever you're paying on. So let's say you got credit card debt and you're paying, 27% interest rate, which is not crazy at all when it comes to credit card debt. That's actually very customary, right? It's crazy to have to pay that sort of rate, but that's very usual rate when it comes to credit cards. So let's say you're paying 27% and you got, $10,000 in credit card debt, right? Some people might say, I can get a personal loan, and let's say it's at a 10% APY. Well, then they'll go ahead and go and take out a personal loan through SoFi. And then SoFi can get you through the ecosystem through their banking products, their savings products, right? And then student loan refinancing, investing through it, credit cards, mortgage loans, insurance. Once they get you in the ecosystem, they got plenty of products to sell you, right? And you can just see right off the front page of SoFi, they're so mobile centric. And when you think about like a new age bank versus a traditional bank, right? Traditional banks were all about the branches, the locations, right? On every corner of America, Bank of America and Wells Fargo and Chase and all the other guys, right? That's what you think about when you think about traditional banks. SoFi's, they brand themselves very heavy in mobile first. We are mobile first, right? Now, this gets very important because you got to understand SoFi's customer base and how this base is going to build over time and how this impacts the amount of assets for SoFi. Very important you understand this, okay? So let me break it down like this. You have the different generations over time, right? They call them the builders generation. Then you have the baby boomers. You have Gen X. Now, in terms of SoFi could potentially attract some of these folks here at the top, but they're not so likely. These old school traditional banks, the Bank of America, Wells Fargo, Chase, a lot of those guys, they have these folks kind of on lockdown already. And so a lot of these sorts of folks in these generations are likely not coming to SoFi. And that's not a bad thing. That is perfectly a fine thing, okay? Because what SoFi is doing is they're really attracting a lot of these folks. Let's call it the younger millennial generation, as well as Gen Z, and I'm sure they're going to do a phenomenal job of Gen Alpha. And when it comes to these folks, they might have smaller net worths right now, right? But remember, let's say they're attracting a 22-year-old. Well, a 22-year-old doesn't have all the money this baby boomer has, right? But you know what a 22-year-old has? They have a lot of time on their hands. And that 22-year-old is eventually going to get their first good job, right? And then they're going to eventually need their first car loan and their first mortgage and sign up for credit cards and all these sorts of products. And so that 22-year-old becomes insanely valuable as the years tick on, and their net worth goes up, and they invest through SoFi, maybe, things like that, right? And so suddenly that customer that was a 22-year-old that maybe had a $3,000 net worth when they first attracted that 22-year-old, right? As the decades take on and the years take on, SoFi gets to grow along with that customer, right? And you could think about your own self whenever you sign up for whatever bank you bank with, right? Whether it's, Wells Fargo, Bank of America, or some regional bank, or Chase, or whoever it is, I would bet you had a much smaller net worth when you first signed up for their bank. I remember when I first signed up for my first bank account, right? It was because I wanted to get direct deposit from Einstein Bagels. where I was working as a, somebody cleaning dishes and taking orders at that time, making, I don't know what they started me at, $7.50 an hour or whatever, right? And so for Chase at that time, I wasn't a very valuable customer. Actually, they lost money at that particular time because they gave me a $250 bonus for basically, setting up direct deposit. But then as my net worth grew over time, obviously Chase benefited massively. So this is very important. You understand this about SoFi's customer base. They're attracting a lot of younger folks, a lot of people in their 20s and 30s, right? But those 20 and 30-year-olds over time will become a lot more valuable, right? And once again, they're going to snag a few of these people here and there, but this is where they're really going after. And then Gen Alpha, when those folks need bank accounts in the coming years, I think SoFi's set up very, very well to attract a lot of those folks versus a lot of these traditional Bank of America, Wells Fargo types. Because remember, Gen Alpha, who's their parents, right? Well, Gen Alpha, the millennials are their parents. And millennials, definitely mobiles first, internet first, a bunch of folks. And so they're going to be much more open to SoFi than, let's say, previous generations, right? So very important to understand those dynamics, because you've got to understand that to really understand SoFi on a deeper level, in my personal opinion, right? Now, in terms of members, which I just call them customers, SoFi calls them members, it's going up substantially. We all know that, right? I mean, SoFi just continues to attract more and more and more members to their service, and I don't really see that stopping. They just have such a great ecosystem of products that I see that member, I mean, there's going to be a day when SoFi has 25 million, 30 million, 50 million members. That's my personal opinion. That's where they're going long term, right? Now, in terms of their tech side, Galileo, this is also a phenomenal growth opportunity for SoFi as well. And you look at Galileo accounts this latest quarter, they're at 151 million Galileo accounts. So that business has got the growth going, got the mojo back going again. It had this kind of big drop off here, and people freaked out at that particular time. And things are going back in the right direction when it comes to Galileo accounts. Now, look at this. Check this out. Interest income, net interest income for the company. If you go back to 2021, 252 million, then 584 million, then 1.2 billion, then in the trailing 12 month, 1.4 billion, right? Look at total revenues, $977 million to $1.5 billion to $2 billion to trailing 12 month, $2.2 billion. So the growth for SoFi has been phenomenal, absolutely phenomenal. They're attracting more and more customers. They're being able to get more and more folks in the ecosystem, sell multiple products, and at the end of the day, their net interest income is becoming more and more impressive, right? Now, additionally, things have really started to come together on the bottom line. So what we're looking at here is net income or net loss, right? And you can see in 2021, they lost almost $500 million. Whew. Then they lost $320 million. Then they lost $300 million. Now on a trailing 12-month basis, they lost $178 million. But here's where it gets really good. If you look on a quarterly basis, look at how they brought these losses down, and now they flipped to profitability. If you look at the latest 2 quarters, they're now operating income positive. $51 million in the December quarter, and this latest quarter, $94 million in the plus when it comes to operating income. What a change versus a company that was losing, $50 million operating loss to now be bringing in nearly $100 million operating income. Big switch up in the business model, right, in the financials, and that changes everything forever for SoFi. If you look at net income for this company, it was negative every single quarter. They would lose tens of millions of dollars, right? And no longer. Look at the latest quarter, $88 million of positive net income. The previous quarter, $47 million of positive net income. So SoFi's completely changed their financials now at this point in time, and it's important we all understand that. And keep in mind, this is in a time period when certainly we've seen credit losses go up for a ton of companies, right? And inflation's really hit the consumer for the past 3 years. And despite all that, SoFi's still putting up, if anything, they're improving their numbers as time goes on, which is very, very impressive, right? And don't think SoFi is just giving loans to anybody, and don't think SoFi is just, has like a poor credit base or something like that because they're a lot of their folks are younger. No, when you look into like the credit scores of their average loan, it's very, very impressive for SoFi. Now, here's the deal. Forward P looks insanely high for SoFi, right? If we look at 1000xstocks.com, showing a forward P of roughly 80, right? And those are obviously based on analyst estimates. But here's the deal. Look at the 2-year forward P. It's like 20. The company's at infant stage of profitability, and so as long as we don't have some incredible recession or something like that, which, you could say for all companies, but certainly banks, it always hits them very hard. The company's profitability is about to go up immensely, right? And so it's all of a sudden going to go from, wow, it looked really expensive to it looks really cheap. And who else has these sorts of growth rates really in the banking category in the US? You can't really find it overall. So where do I think the stock's a buy in those sorts of things? Well, and where do I think the stock's maybe going longer term? Well, here's the deal. $5 to $7 range, I would rate SoFi as a strong buy. Like that's just really like, I'm looking at SoFi today and all I can think about is I need to buy more SoFi shares, okay? $5 to $7 strong buy in my opinion. $8 to $10 is still a buy, right? It's not quite as exciting, but it's still a good buy for the long term, right? 5 to 7 is that like, whew, you gotta be flipping my flapjacks, right? $11 to $12, I still view the stock as a small buy. If it goes over 13 plus, then it's a hold for me at that particular time, right? But in my opinion, kind of, if I look at SoFi and kind of thinking about where this company goes over the next 10, 15 years, which I'm trying to always think longer term, right? I think they have a potential to be a big dog bank, right? When we talk big dog bank, we're talking $100 billion plus market caps, and there's a lot of them. I mean, you think it's only Wells Fargo or Bank of America and Chase? No. If you pull up a list of the biggest market cap banks in the world, it's such a long list, it's ridiculous, right? And so when it comes to a company like SoFi, for instance, I'm looking at this company and say they have really set themselves up very well to become an actual giant in the banking system, right? And to become really the bank of, the newer generations. And as those folks have their net worths climb over the next 10, 15, 20 years, it should be absolutely phenomenal. And one last thing I want to add here in regards to SoFi, Anthony Noto, the CEO of the company, right? I've been very impressed with how he's leading this company and keeping them in a good place and obviously building on the financials. But the second thing I've been really impressed with is he is not afraid to buy shares of this stock. And I appreciate that, right? There's a lot of reasons why a CEO would go to sell shares. A lot of reasons. People think, they think the stock's going down. No, it doesn't work like that. There's a multitude of reasons why a CEO would sell shares of a stock. But there's only one reason why a CEO buys shares of a stock. They think it's going higher, right? That's the only reason. There's no other reason to buy shares in a stock and continually add stock in the open market unless you feel like the stock's very undervalued and you think it has, an incredible opportunity over the coming years. And so when you look at Anthony Soto, man puts his money where his mouth is, right? Pretty darn impressive. So that's SoFi. It's the first one of these three stocks that I definitely view as a buy, and it's a pretty exciting opportunity, right? Before we get to number 2, I want to show you guys this here on 1000xstocks.com. We have now added mandatory metrics, all when you search a stock essentially, right? So all the mandatory metrics, the most important things you'd really want to know. So I have meta stock here as an example, right? Stock price, market cap, and all the mandatory metrics. 2-year forward P is really hard to find with a lot of companies. We have next year earnings per share growth. We have not only the current year expected revenue growth, but next year as well. And then gross margins, net margins, trailing 12-month price to sales ratio, and forward price to sales ratio. Not a lot of people really have that, and I think that's important. And then we have advanced metrics right underneath that, which goes much more in depth into some of these. So that's for my people that really like to get nerdy, like you're going to have fun in advanced metrics, right? And then we also changed it up and we added that to the compare feature as well. So now you can compare 3 stocks versus each other, try to figure out who's the best deal, who's the rip-off of the bunch, right? And you can do the same thing, mandatory metrics, and then we have the advanced metrics right underneath it as well. Additionally, we have conference calls all up and running now, and we have transcripts up and running as well, because I know some people like to, read certain things that happen in the conference call rather than just listen, and you can adjust speed on that as well, okay? So if you don't have access to 1000x stocks and you'd like to apply for access, click the pinned comment down there today and go ahead and fill out the form to apply for access to 1000x, or you can go to www.1000xstocks.com. Click the pinned comment. I think it's a little easier than that, okay? No, stock number 2 of 3 is Honest Company. Honest Company, $2.47 a share here today, okay? Now, Honest diapers, wipes, soaps, shampoos, lotions, cosmetics, those sorts of products, right? And Honest has had an incredible history as a company, but also just an incredible history as a public company, right? And we'll touch on that in just a moment. But their real focus is clean products. They're higher price point than, I'd say, pretty much all their competitors, because you go into a Target, you're going to see tons of Honest products, and they're usually going to be the highest price point versus their competitors, but they're really focused on clean products. And so when Jessica Alba really founded this company and built this company, she wanted to focus on eliminating a lot of the crap that gets put into a lot of the products, unfortunately, that people use every day and they don't really know have certain ingredients in them and those sorts of things. So she was like, wanted to create a brand and a company that, you know, didn't have those products, right? And so that's what she's done, obviously. And the stock's up about 50% in the past year. It's up a lot more from the October lows. The stock got all the way down to $1. And the reason it got all the way down to $1 is the company got completely mismanaged. And they actually put themselves in a situation where a lot of people thought this company was going to go bankrupt. Well, how things have changed. So, first off, the revenues have gone up very nicely for this company over the past few years, but look at the gross profit, for instance. Gross profit, they were stuck in kind of the low 20s as far as $20 million a quarter in gross profit. The latest quarter, nearly $32 million of gross profit, and that number's now built 2 straight quarters. If you look at operating income or operating loss, they had an operating loss of $10 million plus every single quarter. It was ugly. And look at this, operating loss is now brought down to $1.2 million operating loss. So now we're talking about this company's doing the big flip, right? From a huge money-losing, money-suck company to actually, wow, this is going to start making money, right? If we look at net income, look at this. I mean, every quarter they were losing $10 million plus. They were losing $3 to $5 million a month. In terms of the bottom line of this company, right? And then look at the last 2 quarters, $1.1 million positive net income and only $1.4 million net loss in that particular quarter, right? So the company's now flirting with going, like strictly positive net income. And so, oh my gosh, what a night and day difference, right? The cash and cash equivalents for the company went from $9 million to now $33.6 million in the latest quarter. So once again, when I talk about this company, that people were worried about bankruptcy, it's not for no reason. The bankruptcy fears were real at that time. The company's cash balance had gone to hardly anything, and they were losing a fortune every quarter, right? I mean, it was dire. It was a very, very dire situation, right? Now, the stock price hasn't even gone up. I don't even want to talk about stock price yet. We'll get into the stock price and where that baby's going. But it hasn't even really begun to reflect what the changes are in the business model so far, okay? But look at total current liabilities. Total current liabilities, in December 2022, $63 million. They brought that down to $53 million. Total liabilities for the company was $94 million. If you go back to December 2022, this latest quarter, down to $73 million in total liabilities. And so the financials of the business model have completely changed. I mean, it's a night and day difference. It's not even it's like the whole company changed, but yet they didn't change. But you know what did change? Something very important changed. This lady came in, Carla Vernon. Oh my gosh, she's done a heck of a job. I gotta tell you, she's done a heck of a job. She came over January 2023, and I didn't know what to think about her at first. I'm like, I don't know. The company was such a letdown from the go. And, ever since they went public, Nick, who knows what that man was doing. And she came in and she changed it. I mean, just completely changed it for the better, right? And then it's not just about the stock prices start to reflect that. It's about the numbers of the company. It's a night and day difference, right? Before that, she was at General Mills. She was also a vice president at Amazon, the consumables division. That's how she got acquainted with the Honest brand back in those days, right? She also brought in a few different people, but this is the other one I'll highlight, Kate Barton. I think she's done a pretty good job so far as well. Chief Growth Officer of the company. She won me over when she got these hats for the team. And I saw this, she posted this on Instagram one time. The EBITDA hats. Earnings before interest, taxes, depreciation, amortization. That's what I'm freaking talking about, okay? You get those hats for your team, you win me over, okay? So what a job. Now, Jessica Alba, the founder of the company, right? She stepped down, I think it was a month ago or a few months ago, the news came out. And I wasn't surprised. When I heard what happened, I wasn't surprised, just to be quite frank. It seemed like, I don't know, it seemed like she was kind of like clinging on. If anything, I don't mean that in a disrespectful manner. It's just like, it seemed like she was just, from my perspective, it seemed like she didn't, I didn't really see her having a place there other than just like helping marketing side. Like, oh, I can post some stuff on Instagram or something like that, right? Jessica Alba's decision to leave the company, the Honest Company's chief creative officer, was not an easy one to make. 2 months after announcing that she would be stepping down from her leadership position, and over a decade after first launching the company, the 43-year-old is opening up on how she knew it was the right decision. I wanted to leave it in a good place, she said. And so that's good that she felt like she was leaving in a good place. And obviously the financials show that she left it to a good person, right? When I realized that the business really needed the more of a streamlined flow and not a visionary flow, I had to start thinking about what that meant for my role. And it took me a hot minute to get there, she said. I needed to leave it in the hands that I knew would be safe and with the right team. Alba said that while she finally felt the company, it was like letting a kid go to college, right? And so if I think about my best investment in the public account, right? 2,581% gain, Elf Beauty. If I think about Elf Beauty and what they've really built there over the last 5, 6, 7 years, they've never relied on any one person, right? And they understand how to use marketing very successfully and how to build their brand without just leveraging one mega celebrity. And I felt like for quite a while, Honest was, I felt like they were just counting on Jessica Alba to do the lifting in terms of like marketing. In my opinion, that's at least the way it came across. And I think to have those folks part away, I think is ultimately going to end up being the best thing for the company, because that makes the company, has to stand on its own 2 feet and really focus on, marketing, doing it the right way, using influencers and creators and all these different folks on all these different social media platforms all over the world, right? You got to understand that in the new age. Elf does that as good, if not better, than anybody else does it. And look at their stock price. It's very apparent on how well they've done that. And so with Honest, there's so many family influencers and vloggers and all these different folks on TikTok and Instagram and YouTube and these different platforms. You got to be sponsoring those folks. You got to be sending them free products and launches and things like that. Elf's shown everybody the playbook, right? And so I think Honest is a nimble enough company to kind of replicate a lot of what Elf has done over time, right? Does that mean the stock's going to go up 2,500%? Well, maybe. I don't get too excited about that, right? Now, in regards to this, as far as the financials, 2024 should be a small profit year for Honest, very, very small profit year. 2025 and 2026 should be a massive increase in profitability, right? I think if in 2024, if Honest can just be positive net income, is going to be big for this company. But I think then you'll see a pretty substantial increase in terms of that net income in 2025 and 2026. Usually you get that first flip to like small profit, and then all of a sudden, boom, it's like a major kind of tears up over that next couple of years, right? And then 2027 and beyond, I just think they'll just, continue to build on profitability. And Honest's best days are a long time from now, a long time from now, in my opinion. And I can totally see the stock being $15, $25 in the future. No doubt in my mind. When I look at the price to sales ratios companies trading at right now versus their peers in the industry, and I think about the growth rates Honest has in terms of the top line, and then the bottom line is not even close. I think the stock has a long runway of growth for many, many years to go in the future. So, even at these prices, the thing is, the move from $1 to $2, that didn't reflect, in my opinion, nearly enough of what changed the business model. We're talking about, this was a company that was probably going to go bankrupt. It was a pretty good probability. And now, at this point in time, it looks extremely unrealistic for this company to go BK. Now, the biggest question is, how profitable are they going to get? Is this a company that's going to start having like positive net income of like $10 million a year? 20 million, 30 million, 50 million, 100 million, 200 million. I think that's the bigger question now. And that's a whole different debate. Right? Then are they going to go to zero? And so I think the stock price has a long runway of growth this year for 2024 and in 2025 and beyond. So that is Honest. Third one up here. This stock is on fire. Third one of these top 3 stocks that are under $25 to buy. It's on fire. You know which stock it is? Palantir. PLTR. Oh my gosh. Okay. Just a rocket ship ride. But the rocket ship ride I think has a long way to go in regards to this one, okay? So when it comes to Palantir, the first thing I want to point out, remember, Palantir is at the cross-section of data artificial intelligence. They're basically, if you're a big organization, you're a big company, you've got massive amounts of data, you need to make better decisions that could help your business save money, could help your business make more money. Palantir is the product for you. If you're the military, if you are a big government organization, Palantir is going to help you immensely. And so you need Palantir, right? Now, in regards to Palantir's growth rates, it had been very depressing for a while. From 2021 to 2023, companies' growth rates went from nearly 50% revenue growth rate, right, down to 12%. And so that was very rough, and the stock got absolutely decimated during that time. Stock went from a $30 plus stock down to, at the lows, it was like $6 or $7, if I recall. It was insane, right? And it was an opportune buy time, but I can understand why it happened. I mean, when you go from 50% growth down to 12%, people start thinking, oh my gosh, we're going single digits here. Now, since that time, we've seen a massive increase in terms of revenue growth. Then they brought it up to 16.8%, 19.6%, 20.7%. We don't know where growth rates are going to top right now, and that's pretty exciting. Do we top at 22%? Do we top at 25%? Do we top at 30%? Do we ever get back to a 40%? I mean, these are all things that people are wondering right now. But it looks like this company is going to be sustainably in the kind of the revenue category of maybe like 20 to 30% growth now at this point in time. That's the way it looks like to me when I look at what they have going on with AIP, all the excitement there, Foundry, Gotham, Apollo, Maven. I think we're probably, I think 20 to 30% growth is pretty realistic now at this point in time. Now, in terms of the business excitement, that's great, but we also have stock price momentum right now. And so being that Palantir is a true AI company, we also have analysts that are chasing each other now at this point in time and having to bring up price targets. And you see this one today, they put out a $29 price target. And a lot of these analysts still are so bearish on Palantir. This person's got a $9 target price on the stock. I don't think they understand the business model, in all due respect. But you're going to see these analysts, especially if the stock continues to beast, just continue to bring up their price targets, continue to kind of get more bullish and positive on the stock, which then, guess what happens? That breeds the stock price to go up even more, which then, just in this kind of beautiful cycle of stock price momentum, price targets. It's the opposite of what the stock had to go through back in like 2022, for instance, when it was just getting devastated day after day, right? Now, check this out. Look at this. So if we go back to September 2022, they brought in $477 million of revenue. This latest quarter, $634 million of revenue. If we look at gross profit, September 2022 quarter, $370 million of gross profit. This latest quarter, $518 million of gross profit. So obviously the gross margins for Palantir are 80% plus, phenomenal gross margin company, which doesn't come as a surprise, SaaS, right? Net income, look at this. So if we go back to September 2022, they had a net loss in this company of $9 figures, $123 million in a loss for that quarter. And then we look at the March 2024 quarter, we're making 9 figures now, right? Like, ooh, baby, what a turn. $105 million of net income in the March 2024 quarter. So that's big. That's big, right? Now Palantir is a sustainably profitable company, and now it's just a question of how big are the profits going to build, right? Somebody, one of our members in the private stock group, they posted this in the Palantir chat last month, and I remember screenshotting this, and I just absolutely loved it. It shows Palantir and kind of in the the SaaS area there, and just kind of like swallowing everything. And when you think about Palantir's product, and you think about as a company builds bigger and bigger, it does kind of feel like they might end up being a vacuum over the next 10, 20 years. And so this illustration, I thought it was funny, but I also thought, I actually think that's kind of realistic, where I do think they're kind of like a black hole that's going to swallow a lot up over this next 10, 20 years. I mean, a lot, right? Now, in terms of the balance sheet of this company, it's an A-plus balance sheet. They're sitting on, getting close to $4 billion of cash equivalents in treasuries now at this point in time, which is an incredible amount, right? So A-plus balance sheet on this company. If we go to 1000X and we go ahead and look at the forward PE, you can look at the forward PE and say, dang, it's expensive, man, 75, whew, high, right? You look at a Salesforce and compare them against a Salesforce, 24, right? You compare them against a Microsoft, 35. And so you look at it from that perspective, but also remember, Salesforce very mature company, very far along in their profitability story, right? Microsoft, very mature company, very far along in their profitability story, right? Palantir, not a very mature company, and a company that's an infant stage of profitability. Like they just got to profitability really in the past year and a half. So therefore, Palantir is going to be able to just absolutely increase their earnings per share in quite a dramatic amount over the coming years, in my opinion, right? Now, if you want to compare them to maybe a better comp, which Salesforce isn't a great comp for Palantir. I don't think Microsoft's a great comp either. I honestly don't think Snowflake is either, but there's really no one that's a perfect comp for Palantir because it's a one-on-one. But people like to still compare it to something. So we can compare it to Snowflake, right? And if we compare them to Snowflake, forward P on Snowflake's 191, 75 for Palantir, so therefore, this kind of almost makes it look like, maybe Palantir's cheaper. And you might say, well, but maybe Snowflake has massively more growth expected. Well, if we look at kind of analyst estimates overall here, it's not like it's much more growth. Look at next year revenue growth expected for Palantir, 21%, right? And Snowflake just under 22%. So it's not, if Snowflake was growing, let's say Snowflake's expected next year revenue growth was 45%, 52%, and Palantir was at 21%, I'd be like, okay, I understand why Snowflake has such a bigger, forward P than a Palantir, but roughly the same, I don't know if I can, and you look at gross margins, Palantir's got far better gross margins than Snowflake, right? Look at net margins, oh my gosh, Palantir's net margins are astronomically better than Snowflake, right? So I don't know if I can say Snowflake's a better business model, just to be quite frank, than Palantir overall, right? So the way I kind of view Palantir overall is the stock's kind of almost like a permanent buy, right? But the thing I'll say is when you own Palantir, it's kind of like bull riding. That's why I had that bull picture there, right? And the goal is to just stay on as long as you possibly can. And you just hold on for dear life, right? And that's kind of the way I view Palantir. It's such a special company with a very special CEO there at Alex Karp, right? And their product is described as best of the best by so many, in my opinion, what I would call experts in this field, and so many executives that at the end of the day, you got to treat it like you're riding a bull and you're just holding on for dear life. And that's the way I kind of view Palantir. And so if Palantir was to be $35 tomorrow, I'd look at it and be like, oh man, I've made so much money on this. Maybe I should sell. But at the end of the day, I wouldn't. I would keep riding that bull because there's a decent probability Palantir is eventually a $50 stock. And a lot of people view the stock as it's going to be a $100 stock, many hundreds of dollars of stock. I know people that think this is going to be a $1 trillion company. I'm not convinced they're going to be a $1 trillion company, but I definitely think they have the pieces to become that someday. Now, to actually execute on that and then become that it's a very challenging thing to do. But if I look, they actually have the pieces. They have a young enough CEO who's energetic enough, with a good enough executive team there to actually pull it off. They have a superior product, and they're going to launch a lot more products and services over the coming years. A company like Palantir, they're not going to go to sleep until they dominate everything and make everything better, right? They got the great balance sheet there. As they get more and more profitable, they're going to be able to put that money into share buybacks. And so they've got the pieces. I will say that they got the pieces that could they become that someday? They could, right? The great news for me is I don't need it to become that. It's already such a successful investment for me, but imagine where it will be at 5 years or 10 years from now. I don't need it to be a $1 trillion market cap. If it goes there, clap it all the way, baby. I don't need this to be a $250 stock for it to be a win, right? Or a $300 stock or a $500 or a $1,000 stock. But if they become that and they take all these pieces they have and they actually execute and actually do this, oh my gosh. And I'll say that for the shorter term, if they ever get close to that 30% growth rate again, well, look out for this stock. Because I think almost everybody, even most of the bulls, I'd say almost even all the bulls, have written off 30% growth for this company per year, a 30% CAGR. This used to be something Alex Karp talked about many years ago. He's like, 30% growth. And they obviously went way away from that, got down to 12% growth rates, right? If all of a sudden they get back to that 30% growth rate tonight, put yourself to sleep, okay? Oh my gosh. You gotta be flipping my flapjacks. Appreciate y'all joining me as always. 1000xstocks.com. That will be a pinned comment down there if you're looking to apply for access. Also, if you're looking to apply, join my private group, get access to all my premium courses, teaching you everything I got up here. That will be in the description area down there. Much love and have a great day.